Hello, everyone. Good evening, and welcome to our weekly webinar, Breaking the Savings Trap, Money Market Funds versus Savings Accounts. Thank you for joining us this evening. We'll start in a few minutes. Let's just give other attendees a chance to join, and then we'll start. All right. Thank you, everyone, for joining us this evening for our webinar on Breaking the Savings Trap, Money Market Funds versus Savings Accounts. If you've been wondering about where you should put your money, where it will work hard for you in terms of your savings, then this is the right webinar for you. I'm going to invite our speaker for the day. My name is Sharon. I'm going to invite our speaker for the day, who is CEO and co-founder of Ndovo, Radhika Bhachu, and I'll let her take it away from here.
Brilliant.
Welcome,
Thank you so
Radhika.
much. Hi, everyone. I hope you're doing well this evening. Let me share my screen, so just bear with me. Okay, right. So hi, everyone. I can see some, for those of you who don't know me, I'm Radhika Bhachu. I'm the co-founder and CEO of Ndovo, but I can see majority of some names that I recognize on our platform. So it's nice to see some of you. I've actually met some of you in person, which is really nice. Nyabudi, hello. How are you? I hope you're keeping well, and a bunch of others. So today we're going to take you through how it's important to actually break out of the savings trap and really be a little bit smart with the decisions you make so you can actually grow the money that just simply sits in a savings account. And I'm really excited about this is because Ndovo, I never thought, so we've been around for a while and I never thought Ndovo would actually launch its very own money market fund. So it was a big win for us as a company. And the team's been working really hard to do it. And we do think that we will eventually be one of the better money market funds in the industry in Kenya. So we're super excited about that. So let's get started. So today I'm just going to give you an overview of who Ndovo is, how our journey since the beginning of the company, what we've achieved so far, and then talk through what is a money market fund, how does money market funds play an important part in your investment strategy, and then why Ndovo, and then we can open it up for questions because that's where I think the real value comes in. Please feel free to use the chat, answer any questions. There's a Q&A section. The more we hear from you, the better it is. We love your feedback. We like to grow with you, so do please share your feedback. So a little bit about us. Ndovo is a regulated robo-advisory platform that is owned by Ndovo Wealth Limited. We're licensed as a capital markets authority, and we actually set up shop in February 2022. So we've been running for just over two and a bit years. And initially, when we first set out to do this, we actually acquired the investment advisor license. And then very quickly, we actually were able to upgrade our license to a fund manager, which is really important. And that's how we're able to actually launch our very own money market fund. And we have some exciting plans where we're planning to, we got our Rwanda license and we're looking at other East African countries as well, which is super exciting. And what's really exciting is that in February this year, we were approved by the Capital Markets Authority to launch our very own money market fund. And the reason we did that is most of you know us for our global funds, but we do see an important piece that was missing, which is a very good, well-designed money market fund that can complement one's investment portfolio together. So, a bit about us today. We have over 50,000 users. We've processed over 500,000 trades. And on average, since the beginning of our investment journey, our customers who've been with us have earned anywhere from 15 to 20% on the dollar. And that of course changes every day as the market changes, but that's essentially a really strong number. And that number is on US dollar funds, which is very exciting. Because that means that if you're earning in USD, if the currency moves against Kenya shilling, you're making more. So if the Kenya shilling weakens because you're investing and earning in dollars, when you come to withdraw and convert it, you actually make more money. So it's very exciting. So a lot has happened in 2.5 years. And the people behind the business is, we have a chairman called Rick Ashley. He's a veteran. He has 40 years of experience in asset management. He worked at Old Mutual and APA Insurance, and he was a chairman there. He's now the chairman of Dovu. Myself, I have over 15 years of experience just in finance. So very much worked at Deloitte, BlackRock. BlackRock is the world's largest asset manager, and I did my time there in London. GP is our CTO. He's got 20 years of experience building and scaling tech, so he really is the person behind the beautiful app that you see on your phone, or if you use a web solution. And then Ro is our Chief Operations Officer, and he's very much involved with business development, expansion, and regulatory affairs. And he used to work at the NSC, which is very exciting. So we came together in 2022, end of 2021, to really put Dovu together. So that's a bit about us. And today I'm going to talk to you about what a money market is, but before what a money market fund is, before we get into that, we actually need to understand the types of investments that are available to retail investors, so that we can start to understand how these funds come together. So the first thing that everyone's familiar with is real estate land. Us Kenyans love buying land and real estate. The beauty about it is that it's a physical asset. It's obviously a safe investment. It generates income. So if it's not land, but you've got an apartment, you can put it on rent and it generates income. But one of the challenges it has is that it's illiquid. So real estate globally has not seen the type of returns that you'd like it to see over a 5-year period, unless you buy in very concentrated areas, which are for Kenya is Nairobi, Westlands, Lavington, Muthaiga, and those areas. And so the appreciation is very interesting, but I still do believe it's a great asset class to hold as part of your overall investment portfolio. The challenge is that a lot of Kenyans hold land, and they hold it in areas that are outside. And actually, when it comes to liquidating or selling the land, we find a lot of challenges around that. The second asset class is bonds. So bonds are typically a promise by a company or a government who says, I'm going to borrow 20 million shillings from you. And as a result of that, I'm going to borrow it for 10 years. And I'm going to borrow it at an interest rate of 15%. So every year, I'm going to give you 15% for the money that you gave me. And I will, as a result of that, after the 10 years, give you back your money and the interest. And the beautiful thing about bonds is that they are income generating. Some bonds are relatively liquid and they're also low risk. So Kendi has a question. Feel free to unmute your mic. It's a good question. I don't know if attendees can unmute their mic. Allowed to talk? Yep, they have just done that. Kendi, if you want to, I've permitted you to talk, so feel free to unmute your mic. Okay, we'll just continue until he's able to unmute his mic. So bonds is a very interesting asset class. Typically, they're low risk, but they're sometimes a little bit more riskier. depending on the company or the corporate. One really familiar bond that a lot of Kenyans are familiar with, and we actually see a lot of flow, is the government of Kenya infrastructure bond. And recently, they had issued a bond sometime in February, whereby they were offering 18% on the Kenya shilling, which is really interesting. And we saw significant flow into that asset class. The third asset class, by the way, there are multiple different asset classes within the investment universe, but for today, I've only chosen 4. So it's not limited to this, but these are the 4 most popular asset classes. So we have a mutual fund. So the next asset class is mutual funds, exchange traded funds, index funds, unit trusts. So these are all familiar names for things that do exactly the same thing. And essentially, a mutual fund or a money market fund, exchange traded fund, is a basket of companies that are put together by professionals. So the money market fund that Dobu's launched together is put together by us being the professionals, and we have chosen to do it in the cash industry, but you can get mutual funds that are have equities in them, which are a lot of the ETFs that we have on our platform. You can also have commodities, so things such as nickel, gold, silver. You can also have a mutual fund full of bonds. And the idea is that a mutual fund simply is a basket of companies, bonds, commodities, etc. And the reason why mutual funds are super exciting and why I really believe in just holding an index fund is because it's a great way to diversify risk. And of course, the risk varies from mutual fund to mutual fund, but generally, if you look at global ETFs, they're typically less risk compared to holding an individual company. They're super liquid, they're tax efficient, and they're transparent. Now, the thing about mutual funds is that not all of them are created equal, and some professionals are better at managing a basket of stocks compared to others. And the idea is that you need to know how to select a mutual fund and the things to consider, which we'll talk about in a little bit. So typically, Dobu is very much known to create wealth. So, the reason I set up the company was very much focused on how do we empower Africans to create wealth responsibly. And the reason being is that as retail investors, it is well and good wanting to invest in the stock market, but because you don't have the time, the knowledge, or the skill set to know whether a single company is going to be around in 10 to 15 years, actually the best way to invest is actually through a fund. Whether it's a mutual fund, an ETF, a unit trust, doesn't matter, but the best way for an everyday person who wants to focus on their career being a great doctor or a surgeon or a barrister is to actually just invest in a fund. And the fact that you're holding a basket of securities makes it less risky, because now you're not focused on which company is going to do well. You're focused on a particular sector. So you will say, okay, I believe the tech sector is going to be around for 10 to 15 years. And you don't care whether Google or Tesla or Apple are in that mix, but you're just happy to buy a basket of securities. And the same thing happens with a money market fund. The idea is that you don't put all your eggs in one basket and have a net fixed deposit with one bank. Actually, the professionals take a basket of fixed deposits, a basket of cash-like securities, and allow you to put your money in a fund and let us try to get you the best amount of return that we can for a cash fund. The next asset class is just equities and shares. So these are, they're quite sexy. So mutual funds are kind of boring, but equities and shares are quite sexy. They're managed by you. They're typically high risk, because what you're doing is saying that out of a universe of 500 companies in the US, I believe 2 companies are going to be the ones who will be leading the market in 10 to 15 years' time, because investing is always for the long term. And same in the Nairobi Securities Exchange, you're selecting to say Safaricom will always be a global tech giant. Airtel won't come in and take their market share. So when you invest in individual companies, and there's nothing wrong with it, you're just taking more risk. And it's just about understanding the risk. Typically, they're income generating, they're liquid. And yeah, and that's a very interesting space if you are familiar with investments as well. So today we're actually here to talk about a money market fund and really what it is. So I've told you 4 different types of asset classes, but a money market fund specifically is a mutual fund. It's an index fund. It's not an index fund, sorry, it's a mutual fund. And essentially what money market funds do in Kenya, so another alternative name for a money market fund is a cash fund. We have cash funds in the UK, the US, etc. But surprisingly, in Kenya, cash funds, money market funds tend to give you a good return compared to holding your money in a cash fund in the US or in the UK. So a money market fund in Kenya simply invests in short-term instruments that are high quality, so things such as a treasury bill, commercial paper offered by a company. So for example, Safaricom can say, I want to offer a commercial paper. It's normally within the year period, a period of 1 year, and they borrow money. So they'll say, we'll borrow $5 million and we'll give you an interest rate of 16%, as an example. And the other thing that people invest in is fixed deposits as well. So typically all money market funds out there in Nairobi have an investment in short term. So anything between 3 months to 18 months, and they do it in low risk assets such as cash-like assets, so fixed deposit, etc. And the returns are modest because the objective of a money market fund is not to drive significant growth. It is to preserve your capital and outpace inflation and provide you slightly more return than a savings account. So if you find a money market fund that's giving you 40% return, you should question it, because that's not why money market funds were traditionally designed. They're designed to help you protect your capital, make it grow and outpace inflation, but not give you these stellar returns. And that's why you have those 3 other asset classes: real estate bonds and equity funds and individual company shares that help you do growth. But the idea of a money market fund is capital preservation. And because they're designed to preserve capital and outpace inflation, the risk typically, when you compare it to other investments, is quite low, and therefore it makes a really nice addition to your portfolio. And the great thing about money market funds is they're liquid. You can liquidate daily. You can see your performance daily, which is a great way to say, okay, if I'm going to hold real estate, which is illiquid, I have a money market fund, which is Can you hear me? It says my internet is unstable. Let me just double check the internet. Bear with me 1 second. It seems fine. Okay. I'll just go back.
We can hear you, right?
Yeah, so perfect. Thank you. So typically the idea is that the money market fund is a really nice piece of the puzzle that fits into one's investment portfolio. And the reason this is important is diversification, and I'll come to that in a minute. So I'm really excited to introduce the Dover Money Market Fund. I worked at BlackRock for nearly 7 years. Never did I think in my dreams that we would be launching our own fund. Even when we set up this company, that really wasn't the agenda. But actually, we're super excited to launch the Dover Money Market Fund. And it does exactly what we say, what I just told you. So it invests in government securities, fixed deposits, treasury bills, and commercial paper. All of them are no longer than 18 months of investment. And it's a Kenya shillings fund, and it's going to be targeting a return of anywhere from 15 to 18%. And it launched actually on the 5th of August, and we've seen significant flow come into it. And so far, we're targeted to have a return of 17% at the end of this year, at the end of the first year. And typically the characteristics of our money market fund are not too dissimilar to what's available in the market. So the base currency is Kenya shilling. The interest and return is determined daily and credited to your client account on a monthly basis. It's a very low risk fund. The principal is guaranteed. So what does that mean? Is that it's a capital preservation fund. The money that you put in, you're unlikely to lose it because it is preserved, because we're investing in such low risk investments. And the idea is that it will give you a better return than inflation. Now, Kenya's inflation rate recently that was published was about 6%. So if you're going to be earning 17%, that is a great way to make your money grow. And it is, so it prefers, so the minimum initial investment is 500 shillings, and it follows the standard taxation process, which is you get taxed 15% on interest income, and is regulated by the Capital Markets Authority of Kenya. And we go through the standard governance and processes that we follow. So the Dover Money Market Fund, why is it better to hold your money in a money market fund versus a bank? Now, this stuff really blows my mind. And what I did actually was put together an example of how one's money would grow if you held it in a money market fund versus a bank. And the reason I've chosen a 5-year period is because typically all of us have our savings in a bank, and you have no intention necessarily of moving your money from a bank to you just want to hold your money with the bank because you're saving, you're building up your assets. Now, Kenyans have become very good at saving. A couple of rules of thumbs, which I'm sure if you've joined a webinar before, I say over and over again. And the idea is that you should always look to save 20 to 25% of your income. And your income consists of not only your salary, but any side hustles, etc. You should look to save anywhere from 20 to 25% of your income every single month. Now, if you're not saving 20 to 25%, sit down, have a look at your monthly expenses, and look at the small expenses that actually eat into your savings. Because the big expense, traditionally how humans behave, is that if I'm going to go spend 50,000 shillings on something, I will think about it. But if I'm going to go and spend 1,500 shillings, I won't think about it, right? Because it feels so small. But really, savings are built with being mindful of how you are spending. So if I was you, I'd go back and look at my 3-month statements and say, okay, how am I spending my money? And are there areas where I can get to saving more than the 25%? But a good ballpark figure is 20 to 25%. So in this example, I would like to demonstrate how, as a Kenyan, you're saying, right, I've got my savings nailed down, and I am saving in my bank account, and I'm super proud of myself because I have saved in a bank account. Now, typically the average bank account, so we're just talking about a simple bank account. Of course, if you have 1 million shillings, you can go to a bank and get a fixed deposit. And the rates vary from time to time, and they change month on month. But on average, the rates that I've seen recently are anywhere from 8 to 12%. And then you get taxed, withholding tax, etc. So it's a little bit lower in terms of the cash in your pocket. But the example I'm showing today is that a lot of people, not a lot of people, but majority of people are getting started on their savings and investment journey. So they might not necessarily have the 1 million shillings that you need to set up a fixed deposit to begin with. So in this example, this is how a money market fund would behave if Sharon was investing 7,500 shillings every single month. Over a 1-year period, her money would grow to 105,000 shillings. Now, when you compare that to a bank, she is actually earning 99,000 shillings as a result of doing the same behavior. Now, when it comes to savings and investment, I cannot stress enough how the power of compounding is a miracle, pretty much. And the reason I say that is that the power of compounding only really kicks in when you have done the hard work over a period of time. So initially, the power of compounding in the beginning never feels a lot, because if you were to compound 1 shilling the next day by 100%, it's only 2 shillings. But if you were to compound 1 million shillings, and then by 100% to 2 million shillings, that feels like a lot. And this is why a lot of financial advisors or people you follow on probably social media tell you that even saving 1,000 shillings might not feel a lot, but when you amalgamate it and consolidate it into, I've been saving 1,000 shillings every single day and then invest it, and you start earning capital interest on your actual interest as well, that's really when compounding kicks in, and you're like, whoa, this is why I was saving. Okay, now it starts to make sense. So in this example, like I mentioned, if you're looking at just 7,500 shillings every single month for 1 year, the difference in holding it in a bank and a money market fund isn't really that much. However, the real difference comes in when you are saving the same amount, 7,500 shillings every single month for over a 5-year period. In a money market fund, your holding or investment would have grown to 680,000 shillings. But in your bank account, it's 493,000 shillings. Now, that is a lot of money. Imagine what you could do with roughly an additional 180. That is a lot. It can make a difference. You can invest that money, you can go on a lovely holiday, you could do a course that you've always wanted to upskill yourself. And that's by simply understanding a behavior of saying, actually, I'm not going to hold my money in a bank account, which isn't doing much for me. And just remember, at an interest rate of 3%, if inflation is at 6%, this value that you're earning is actually it's much lower. It's because inflation is making the value of your money less valuable. So inflation simply means that today, if my 1,000 shillings was to buy me 12 bananas, next year, because the inflation rate is 6%, it will only buy me 8 bananas, as an example. So your 1,000 shillings is losing value 6% every single year. And so what's really exciting is what we talk about is that you're holding your money in a bank is probably one of the worst things I can hear my clients doing. And I'm not saying don't hold it together, and we'll come to how we put an investment strategy together. But the idea is that majority of your savings should be better invested. And you can do that by making small changes and in your behaviors of how you think about money. Now, the really powerful thing is this particular, and this is why I'm showing you the power of compounding. If we're in 100,000 shilling savings every single month in a money market fund that generates 15%, over a 5-year period, and again, this is why I always say after a period of time, first year, 2 years, you'll see small numbers. But when you get to a 5-year period, you're like, whoa, my money has really grown. And it's simply because if you're young, the best thing you have as an investment individual is time. And when you have time, the compounding impact is even bigger. So the simplest, 100,000 shillings every single month in a money market fund, which is low risk, that would grow to 9 million shillings. Versus if you held it and you were saving and working really hard and saving your money every single day, every single month with 100,000 shillings in the bank, you're actually leaving 2.5 million shillings on the table, which is a lot of money. And it's simply coming down to just being able to invest it and make small, better investment decisions. And if you take that over a 10-year period, your amount is 20 million shillings, shillings. And this is why the power of compounding is so magical, is that if you would just understand how it works, you will be financially free sooner than you think. And this is why this is such a real life good example. Is you've been working really hard and you've hacked it. You're like, okay, I'm gonna use Dover or any other money market fund, and I'm gonna put it in a actual over a 10-year period, and I'm gonna get 28 million compared to 14 million. So time really works in your favor. It's not about how much you can do. It's about just getting started, and it's about doing and being mindful of your spending, because 7,500 shillings is like going out on a night and having a boozy night, because Nairobi's not cheap anymore. And if you just put that in, any opportunity you get, you should just be trying to save for 2 to 3 to 4 years time, so you can set yourself up for. I hope that makes sense. I know it's a lot of numbers. I'm happy to share this after, so you do your calculations. So why is it important? So if you've joined us and you've never heard of Dover before, but if you have seen some of our webinars, Dover's really been focused on promoting investing in USD index funds. And the real reason is because I believe as a nation, we are buying an iPhone, an Android, we're buying a MacBook, HP, skincare products if you're females. international brews, if you're men on the phone, or even shoes and clothes, we still import quite a lot of things. And one thing that I always say to all my clients, though, however, is that when you're thinking about your investment portfolio, there's always a balance. And the balance in Kenya, in my terms, is that you should be holding 50% of your wealth or 40% of your wealth, depending on your lifestyle, in Kenya shillings, in low risk assets such as a money market fund. And you should be actually holding anywhere from 50 to 60% in US dollars, because if you look back 5 years, the Kenya shilling has actually depreciated 30% against the dollar. So what does that mean? That means that Radhika, went to buy an iPhone 5 years ago at $1,200. But now if I was to go buy the same iPhone at $1,200, only after a 5-year period, I'm now paying 30% more. And we can all agree that our salaries or businesses have not necessarily grown by 30%. And this is why it's really important to hold 40% in Kenya shillings in low risk assets, such as an infrastructure bond, a money market fund, a bit of money in a bank account, and also have a USD focused portfolio, and not risky stuff. I want you to create wealth. My definition of rich and wealth are very different. Being rich is having all these amazing, nice things. Being wealthy is actually having money in the bank so you don't have to go to work, right? And I feel in this generation where we have lots of expectations that this is the life we want to live, if you are able to simply make some smart investment decisions in order to take away that mental anguish of, oh my God, I don't have enough money to pay for my child's school fees, is a lot better than just being rich with a lot of things. So that's really how I think about investments. Just one sec. My laptop is running out of battery. 1 minute. Okay. So how do I think of putting together an investment portfolio? So if I was, let's take an example of Sharon. I'm not going to give her her age, but she's in her 20s. And she knows that she wants to be able to live financially free. She's heard so many of these presentations that I know she's already has a plan on how to get there. But ideally, she wants to look at 2 components. One is capital preservation and one is growth. Now, as a young person, if you don't need your money today and you need your money in the long term, you can go all in on growth. So you can go all in on actually letting your money grow while it sleeps, investing, keep the investment journey simple by looking at index funds, but you can go all in. The reason growth is a little bit risky is because the stock market has, it's a simple function. It goes up and it goes down, and it goes up and it goes down. But over the last 100 years, it's always the right and the other direction. But yes, there's been some volatility there. But the thing is about going is, I wouldn't say that's like a super smart investment strategy. I believe that you can have a balanced portfolio. The type of investor you are based on your financial lifestyle. And based off of that, it's really important for you to, it helps you on whether you should go all in or not. I am actually an adventurous investor, but 70% of our users on Dovu are actually balanced investors. So that means that where they are in their lives, they're taking risk, but not too much risk. So the idea of a money market fund is that it falls into your capital preservation bucket. What is the capital preservation bucket? It's simply you're building an emergency fund. So that should anything happen, life is unpredictable, the pandemic happened, you could lose your job, somebody may fall ill, you have at least 3 months of runway in a liquid asset such as a bank, a money market fund. And the idea is that in this allocation of 30% of your investment portfolio, you are happy to earn a lower return, but it's easily accessible. And that you're still earning a bit more money by holding a money market fund, and you have a bit of cash in a savings account so that you can pull it in and out as you need. So, just as a rule of thumb, and it starts to vary, and this is why we have financial advisors that can help you, guide you as you build on your investment journey and how best. So when you sign up and go into the account, you have to look for the wizard, but you can actually answer a few questions to understand who you are and where you are financially strategy as such. And the idea is that 30% of wealth today, in my opinion, if you're a balanced investor, should be held in capital preserving assets. And those are things as a money market fund. So if I was Sharon today and I said, okay, I have 100,000 shillings, I would invest 20,000 shillings in a money market fund, keep 10,000 in my bank as an example, and the rest of the money, because I don't need it today and I have some financial goals that I want to achieve, I can put it towards growth assets. And the idea of your growth portfolio is not to take risk, not to take that much risk, it's to grow your wealth responsibly. Okay, so if I look at the stats, and I was doing some research the other day, and 80 to 95% of people trade or buy and sell stocks lose money. Warren Buffett says, if I had $10,000 today, I'd tell you to go low cost ETF, which is an index fund. Just go and buy the S&P 500. Don't overthink it. It's low cost, and your money will grow while you sleep. I worked at BlackRock and I saw the most incredible strategies you could possibly think of. So this is FX hedging, bespoke hedge funds, etc. Really cool stuff. But actually the best portfolios for my clients were index funds. Because you're not trying to time the market, you're not trying to stock pick, you're saying, I believe in human progress. So if companies continue manufacturing, distributing, innovating, and our population continues being productive such that they move out of a low income bracket and they can become consumers of tech. So, in Africa, there's been significant digital adoption. People have got phones and laptops and producing phones and laptops. And the human market is definitely almost like a sign or a benchmark of the market of the world getting more productive. Then you just need to buy an index fund. Really not much to it. Actually, recently we added fractional shares to our portfolio, like the investment committee and I had to sit down, and I was it because I just thought, again, you're encouraging fractional trading, but actually we did it in a way where you can actually buy into some fractional shares. So we picked 6 or 7 of the best. We'll continue adding to them. But the idea is that we want you to hold them. We don't necessarily want you to trade them. And as and when we see them getting better or worse, we'll give you our updates on how we think we want to manage it. But ideally, your growth portfolio, in my opinion, should be, as a Kenyan, as an African, to hold 60% or 70% in global index funds. And the reason being is because it protects you from currency. So you're adding diversification to your portfolio. So you're making sure that if Kenya shilling weakens, you've got some investments in hard currency. It also gives you access to globally growing brands that are contributing to the economy significantly. And that is how you would build your portfolio. So just to summarize, you want to have 30% in capital preservation. So those are things such as 20% in a money market fund, preferably Dawood, and 10% in the bank. And then you want to hold some sort of growth seeking assets where your money grows while you sleep. Keep your investment strategy simple. Do what Warren Buffett says. He's one of the wealthiest people in the world, and just put it in an index fund. And the reason this is important, the reason investing in the money market and assets in different entities is very important. I always, my clients, I said, I don't want your entire investment portfolio because that's a bad investment decision. Don't put all your wealth with Dovu. You should never do that. You should never put all your wealth with one provider. Historically, history has shown us in Kenya, banks have gone under. We've all seen the collapse. Actually, I was speaking to a couple yesterday, and I actually told them, both, even if you bank, you can have your bank accounts with one bank, but make sure one of you has some money elsewhere. And it's banks, right? And the same way, like I'm not telling you today to put all your capital preservation allocation in a money market fund. I'm saying, okay, let's split it up. And these percentages can vary. It's just rule of thumb. So whatever you're comfortable with. And the idea is that you want to put money in a bank because it's low risk traditionally. It's low risk. It's safe. It's easy to transact. It's liquid. And should you have an emergency, it's a great way to be able to draw upon funds. The second diversification you have is that actually you're not having all your savings in, and you actually have it in a money market fund. It's low risk, it provides capital preservation. And lastly, you're earning way more return than you would earn on your money sitting in a bank. Your money is losing value in a bank, but your money is growing in a money market fund. And then, of course, the beauty about global funds is that's diversification on different levels. So it diversifies our currency risk as an individual. We're in Kenya, we earn in Kenya shillings, but we also spend in dollars. We also have different asset classes. So on Dover, you can have the gold fund, which is a commodity. You can add equity funds. You can look at sector diversification. It's a great way to compound your returns and eventually generate passive income. And yes, there is a bit of risk to it, but the way we've designed the portfolio is to make sure that we empower you to create wealth responsibly. So why invest with Dovu? So the way we've decided to build this is that actually we offer you a variety of investments that fall into the traditional way of building an investment portfolio. So whether it's a money market fund, a government bond, or exchange traded funds. Secondly, we are licensed. So we, from the outset, have decided to get our own licensing to ensure that our processes and governance is matched. So we're regulated by the Capital Markets Authority of Kenya as a fund manager. We now got a license in Rwanda. We're a member of ICFA, and our global funds are actually regulated by the SEC in the US and FINRA, which is really important. And the most important thing you should ask any investment provider, including ourselves, is where does my money sit? And ideally, what that means is that your money should always sit with a custodian. So our custodians locally are DTB and globally are Interactive Brokers. And the idea is that when Sharon comes onto the platform and invests 30,000 shillings, that we give the custodian an instruction to say Sharon is buying 30,000 shillings worth of the money market fund or the S&P 500. The custodian moves the money to the broker. We buy assets, so we buy actual units under your name, and they sit at the custody account, which is really important. And those are the questions you should be asking any investment manager. Where does my money sit? Where do my units sit? And what happens if Derby went under, or the money market fund manager went? And the idea is that because we're holding units under your name with a custody, the regulator and the custodian come together in an event should anything happen and say, Sharon, you'll get an email or contact saying, hey, you have some assets with Dover. What would you like to do? Would you like to sell, or would you like to move it to another provider? So just knowing that and knowing that that's how the industry works is really important, so that you know what's going on, and always question any investment provider on that particular point. And lastly, I think the value that Dovu brings is we want you to invest responsibly. So we would never, as an investment committee, we have a lot of debate. A lot of our users do ask us for some riskier assets, and we always say no, because we look back and we look at how has this market grown over a period of time. And ideally, the fact that I can communicate to you today that the average return on the dollar, so including currency appreciation, before currency appreciation, so is about anywhere from 15 to 20%, makes me really proud. And we're not doing anything rocket scientist type. We're literally giving you access to really good investment, global indices. And the way we do that is that imagine there's an index for the technology fund. So the technology fund holds Apple, Microsoft, all the tech companies. There are about 350 companies listed on the US exchange. And there's about 30 managers who provide you that fund. But we've gone through there and looked at, okay, which out of the 30 managers, which manager is giving it to you at a better price? They've got the right governance in place. they are charging you a fair fee, and how are they innovative in their strategy. And we, from the 30, selected one tech fund. And we constantly review that process. So we help you select the best indices that is out there. So we want you to not only invest responsibly, we have a big relationship management team who hold your hand on every step of the way. We're very transparent, so you can see what you're anytime. You can do it from the comfort of your home, and you can get financial advice when you need it. So the real value at Dovu is like it's a one-stop shop, but at the same time, I would never tell you to put all your money with me either. With us, not me, but the company itself. So but we're giving you options to start building those financial blocks of creating a really diversified portfolio. And actually, one thing I should add here today is that I should have actually put a slide in. And essentially, the one thing about the importance of the fund in your portfolio is that recently, on the 5th of August, the US stock market sold off for many reasons. One was the uncertainty of the US market. And let's just assume that Sharon only had her money in the global funds, and they lost about 4% of the value. But for the S&P 500, that's trillions, because that market is trillions. And you would have seen a lot of social media influencers who are not necessarily well positioned to speak, and we're saying, oh no, you should sell, we're going to enter a global market recession, panic, panic, sell, sell, sell. And we have to send out communication to our users to say, hey, listen, the market goes up and it goes down. The best thing you can do is do nothing. And fast forward 6 days, the market came back up again, and it's actually now in the positive range. And actually, what I'm trying to say here is that let's just say over that 5 or 7 day period, Sharon needed to withdraw her money. If she had all her money in a global fund, she may have been selling at a loss. But because she has a money market fund that sort of gives her that protection, capital preservation, and an emergency fund, she's actually never selling at a loss. And this is why it's really important to have a balanced portfolio. And just fast forward, the stock market actually in this year reached the highest heights. So it passed 5,300 in pricing. And then when the sell-off happened, it was at 5,150 in pricing, and the social media was having a frenzy. So just remember, investing is for the long term. The way you manage your risk is by holding some in money market funds, but having a bit of growth as well, because we're young, we need to make sure we achieve our financial goals. We can have financial freedom by investing responsibly. And what Dovu does is it helps you have a balanced portfolio. And then I also like to say to some of our larger clients who sit down with me is that we are the place that helps you grow your wealth whilst you want to go and buy real estate, or you want to go and take $200,000 and do an MBA. How do we are the halfway house that allows you to build your wealth slowly and responsibly, so you can then use it for other financial goals and dreams. Okay, yeah, so these are some of the global funds that we have. I'm not going to spend too much time, but the idea is that we really have handpicked funds. Now, I'm going to be transparent with you. The microchip sector did significantly well last year because of NVIDIA, Intel, AMD. They just continued to innovate in an AI way. Nowadays I Google things, but I chat GP things for when I'm searching for stuff. I stop using Google, and really that's like the next frontier. But always look at, this is the 1 year performance. You want to look at 3 or 5 year performance, because this is significantly high. And so is this, but ideally, if you look to build your portfolio, if you're earning 15 to 17% on the money market fund, and you're earning on average anywhere from 12 to 20% on a USD fund, that is a good expected return. There will be moments where it's really high, like our customers have achieved 72% if they held the money, the microchip. But actually, what I would like to advocate is that investing comes in a balance as well. So if you're earning a decent return on the dollar of 12 to 20%, you should be happy. What more can you ask for, really? Okay, so that is the end of my presentation. So I'd like to open it up to AI. Sorry, I just read the first question. I'd like to open it up to Q&A now. So Sharon, I don't know if we've seen any comments or questions. I'm just going to go through there. Please feel free to raise your hand if you would like to ask anything in particular, but I'm going to go through some of the questions. So Dixon is asking, can I use my money in a money market fund? Okay, so Dixon, traditionally money market funds are designed to preserve your initial capital and take low risk on it so you do not lose your money. But the likelihood of you losing money on a money market fund is if the fund manager goes under and they are doing poor investment management on your behalf. And that's why it's important to actually be able to select the right fund manager and making sure they're doing what they say on the tin. So asking questions as, where does my money sit? If I wanted to withdraw, how long does it take? Are you regulated? Is this product regulated? So, you know, the way Dovu had to get approval for the money market fund was that this product was approved. We are a fund manager, but we can launch products that are not approved. So just making sure you're doing your DD. But typically, every investment is a risk, but typically money market funds do not lose money, and you might not make money on them, but you don't lose your initial capital. So that's something that we should just keep in mind. So Nyabuti is asking, will we see IYH coming back? I really like that ETF. I'm trying to remember what IYH was. I believe it was financials or healthcare. I think IYH ETF, let me quickly Google it. So that was the healthcare one. Yeah, we can bring it back. I think it's still available. We still have clients invested in it. And actually, if I look over, yeah, it's done significantly well. It actually, since year to date, it's up 7% on the dollar, which is pretty impressive. So yeah, we can bring it back for you. Sharon, just make a note of that, please. Okay, so somebody's asking, what do you think about carbon credits ETF? Is it something that we should go into, like global X carbon credits for ETF? So carbon credits is a very, very interesting space, and I think it's a great market to hold. It's something that we can look into. What we try and do as an investment committee on Dovu is not have too many funds, because people then get confused as to what funds to hold. But we can look at it, so we'll make a note of that. And I do think carbon credits is a sector that's going to continue growing. We are moving towards more ESG, so environmental, social governance investing, ethical investing in carbon credit pools, beautifully into that bucket. So it's something that we can look at. Okay, so which global index? So someone's asking, which global index on your platform has the lowest risk? Who is Dovu's competitor on the global index product in Kenya and the region? Okay, so first question, the lowest global index with the lowest risk is the gold fund. And that simply is because gold is a diversifier. And what I can do, if you just bear with me, I'm just going to open our platform just so you can have a look and a browse as to how it works. Just 1 second, and come back. Okay, so great. Okay, so the safest global fund investment is actually the gold. And the reason being is that whenever the markets go up and down, whenever economies are not doing well, gold is seen as a store of value traditionally. So all money pours into gold. And you'll see it's the lowest risk. So you're holding in US dollars, so you're protecting yourself from currency depreciation. But it's not going to give you the crazy returns, or like the strong returns, not crazy, but strong returns that you would see, and I'll show you in a minute, in the technology fund. So for example, last year it gave you 12%. And if you look over a 5-year period, every year it tends to give you 12%, but then over a 10-year period, it's giving you 5%. So how would I read this chart? So let me just take a step forward. Actually, what this chart is saying is that as at the 31st of March, 2023, if I put in $1,000, my $1,000 would have grown by 11%. But if I put in $1,000 from 31st March 2021, every year my principal and interest would have grown by 9% on the dollar. So it's called compounding. And these are honestly not bad returns. You know, it's gold, it's safe, you're not taking any risk. And yeah, it's great to hold, but just note over a 10-year period, if you'd invested in 2014 on 31st of March, $1,000, it would have grown every year by 5%, which is pretty decent. It's outpaced, it would have outpaced Kenya shilling depreciation, which has been 30% over a 5-year period, as well as outpaced inflation generally. So it's still a very strong, good fund to hold. And I'm just going to take you through the technology fund as an example. The reason it's low risk, like the gold is low risk, is because this is a technology fund. The elevator pitch for this fund is that it's every single company that makes the internet tick, whether it's microchips to laptops to shopping to phones to gaming to everything. And if you were to invest in this particular fund, this is a sample of companies that you would own. So this is ownership. You know, we need to move away from working for people. We need to start looking at ownership, and that's why investment is very important. And this is a sample of companies, and you'll generally recognize, we actually use most of them: Visa, PayPal, Intel, Adobe. I use it for work all the time. And if you compare how this fund has done to the gold, the reason it's got slightly more risk is because look at the last year performance. It achieved 37%. So if I put in $1,000, it would have grown by 37% last year, which is amazing. But again, I always say, don't look at last year performance, look at a 3-year and a 5-year performance. And if I had invested this money, even 10 years ago, let's look at the 10-year, in 2014, my $1,000 plus the interest, the compounding power of investing would have grown by 20% on the dollar over a 10-year period. That is a really good return. And we're not doing anything fancy. We're simply holding the market. So to go back to your question, oops, it's gone away. So the question, oh no, it's gone. Okay, so that question's, oh, it's answered. I'll go into the answer. So the other question was, who is Dover's competitor in global index funds in Kenya? Okay, so this is a really interesting question. So that you'll see billboards for Pepperstone, XNES, and a whole bunch of other companies, but they always have this disclaimer that says, CFDs are risky investments. Now, the reason this is now getting a bit technical, but CFD stands for Contract of Financial Difference. And it was a tool designed by really smart finance people in the US to be able to trade cheaply on the market. And what do I mean by that? So the CFD, I'm just going to use my phone as an example. Let's assume this is an Apple stock. I have an Apple phone, it's an Apple stock. Now those companies allow you to buy a CFD. So an Apple CFD then looks and behaves the way the Apple stock would do. And typically why that is high risk is because if that company who has bought you the Apple CFD goes under, this is an artificial instrument. Oops, I can't see it. This is an artificial instrument that disappears. Okay, so that explanation of your units or your investments sitting in a custodian account disappears because this is it kind of works kind of well actually because it disappears with the background. If the company, I'm not going to take any names because everyone's trying to do business and it's hard, but if the company goes under, this disappears. Your CFD disappears. So yes, we have competitors such as the bunch that I've named, but they invest in CFDs and it's not safe. So I would never trade anyone's money in CFDs. The way Dovu trades is that we actually go and buy you the unit of gold commodity, and that unit sits at a bank somewhere. So it's not a fake instrument. It's not a CFD. If anything happened to Dovu, your units still exist. And people, it's really hard to explain that to, on marketing and billboards, but actually that's something that you really need to be careful about because a lot of people in Kenya offer CFDs. So yes, in this market, we have competitors. but the products they're offering is different. In the region, you'll hear companies such as, so the next question is, who are your competitors in the region? You'll hear companies such as Bamboo, oh my God, they're not coming to me. They're in Nigeria. There are a whole bunch of other companies that sort of do this, and I don't know how they operate it, but I know the ones in Kenya definitely have that billboard that says CFDs are really risky, and they are because of the reasons I explained. Okay. The next question is, do you think OpenAI will go public? There was a rumor in California it will. So I actually watched an interview from Sam, the co-founder. I think it will go public at some time. They've just figured out how to monetize it. And once it monetizes, it will go. And now that we're offering fractional shares, we will participate in the IPO, because I do think OpenAI is a sector that will continue to grow from 10 to 15 years. Time, it will take over the way people work, and they will make a lot of jobs redundant, but human race will become even more productive as a result of it. So watch this space, listen to it, and if it does, we'll be very quick to move on to it. Are there halal money market fund options? Very good question. I don't know. So I don't want to give you the wrong answer. I haven't. So actually, I can give you an answer. There's not a halal money market fund option, but you have halal banks that give you a savings option. That is the closest thing that you could get. I actually did a podcast that should be airing quite soon with somebody from the Gulf Bank in Kenya, and he's very well versed on money market funds and how Sharia compliant products work. Now, I don't know if there's a money market fund. We can research it. If you want to send the question to support@dover.co, we'll research it for you. We definitely don't have a halal money market fund on the platform, but I can show you the halal global fund, which is managed by Wahid. And essentially, just a bit of, for people who don't know what a halal means, halal is a way of investing with ethical views. And it doesn't just mean for our Muslim brothers and sisters, it's actually also for Christians. And what the halal or Sharia compliant investing overall means is that we have a view that we don't, as Muslims, as ethical individuals, that we don't have a view that we don't want to hold companies such as defensive companies that supply things to war, betting, drinking, and things that don't resonate with our beliefs and religious values. And so as a result of that, this halal investing is actually coming to the frontier, which blows my mind, because actually I was looking at the numbers, and a significant proportion of the world's population is Muslim. And so I'm surprised that the investment space has taken so long to come up with these products. But essentially, we found a really interesting fund manager in the US called Wahid that helps investing. So actually, the number is here. So 25% of the world's population is Muslim, yet we have 1% of assets that are Sharia compliant. Blows my mind. I don't know why it's taken so long. But essentially, the idea is that we've worked and partnered with Wahid to bring a halal option. And the way it works is that majority of these, so there's a halal or Sharia compliant certification board that looks at the share classes of Apple, Tesla, Johnson & Johnson, who segregate their spending, and they'll ensure that it's Sharia compliant. And so there's a separate board that does that. And then it makes it available for our brothers and sisters in the Muslim community or ethical vision to invest in these companies. And you'll see that so this is not such a it's quite a new fund. As I mentioned, it's been quite difficult for us to find good, well-known fund managers in this space. But you can see that actually by investing with an ethical view or Sharia compliant, the return has been pretty solid. So I don't know about a money market fund, but this is something you could look at. I know the infrastructure bond of Kenya is not halal, because we had another request from another client. But this is definitely something that I would start with if halal or Sharia compliant investments is important. Again, it's low risk. You're buying a bunch of companies, you're not buying one, and I would get started just to see how you progress with it. Okay. Just conscious of time. Okay, now we've got, I know we're over a little, so I will keep my answers short. I can talk for the world. How can I invest in USD rather than Kenya shillings? So Elizabeth is asking, so simply I'll just show you how you can do that. Let's say, Elizabeth, today you wanted to invest in this particular fund. I would go invest now, and you change your currency to USD. And I would pick a minimum of, let's say, $1,000 as an example. And I would, so you select your payment time, mobile money, bank transfers or cards. And for USD, we only have the bank transfer. And then we're very transparent on our fees and how much we charge, etc. So you can see a whole breakdown here. We tell you how, and then you just follow the instructions. So you can actually send us money in USD. And alternatively, if you send us money in Kenya shillings, we convert it and we do charge a spread on it. And then we have your money invested for you. So once you've made the bank transfer, you click on I've transferred the money and confirm payment. So I hope that answers your question. Okay, so Alan is asking, between investing in a money market fund with a 15% interest rate compounded monthly and a SACCO offering 10% annual rate with annual distribution, how would you evaluate your options and better returns over a 1-year period? So actually, just to clarify there, yeah, so annual rate with annual distribution, how would you evaluate? So it's quite simple. So for example, a money market fund is giving you 15% annually, and a SACCO is giving you 10.8% interest annually. Both the money market fund and the SACCO have to pay withholding tax on interest. So that's net, it's evened out. Of course, you're earning more in a money market fund. Actually, no, hold on. I don't know if SACCOs have fees. It varies from SACCO to SACCO. So what I would do is look at, I'll just do a quick simulation. So if I put in 100,000 shillings today and it's going to earn 15%, this is how much it is. You look at the interest that it's giving you. You do the same for the SACCO, and then you look at your fees on the SACCO as well. Again, the beauty of diversification is that you should hold some money in your money market fund and some with the SACCO, because SACCOs can go under as well. So it's just about diversifying your investments. So I would just run a quick math to see, okay, if my SACCO is a cheaper fee rate, then I would use the SACCO, as long as it's generating a higher return net of fees compared to the 15%. Okay, the next question is from George. So does it mean when an investment company goes under, I get my capital back and lose the accumulated interest? If that is the case, how is it so? How is it possible to lose your interest and gain my capital back? No, so George, just to clarify, if, not that they would go under, but in a scenario, if an investment company goes under, and this is actually a really good point, your so going back to the market sell-off as well, because we invest in units, because we actually, when you put your money into a fund, we go and buy units, and the unit actually changes in price, which is the value of it, the company going up and down. And so until you don't sell, you've never actually crystallized a loss. So let's just say on 5th of August, when the market sold and my portfolio came down by 10% as an example, until I don't sell, that 10% loss is actually fictional, because I believe the market is going to go up. Fast forward a couple of days, 6 days, and the market went back up, and actually now I'm in the money. And so if I had sold in August, I crystallized the loss. Now, when an investment company goes under, the concept is exactly the same. Because you've not lost your units are still invested, they're still doing what they're meant to do, growing over time. You don't lose your interest, and nor do you lose your units. So as a function of the investment company going under, because of the route that we've chosen, your money still sits intact somewhere, not somewhere, but with the custodian, and you have actually experienced zero loss. In the sense, it might take some time for the CMA to get in touch with the SEC, to get in touch with the broker to say, hey, right, then now what shall we do? Where are the contact details, and figure everything out, but you've actually not lost your money. And that's why that question is very important. You should know who the custodians are. You should know the regulators. And yeah, and then you just get in touch with them. So I hope that helped answer your question. How risky is blockchain? Because blockchain seems like it's here to stay. So that's another question from on the thing. So we actually have, let me just move this here in a second. So we actually have a blockchain fund. The reason we have the blockchain fund on our platform is because as an investment committee, we do believe, oh, where did it go? Okay, the Kings of Blockchain. So this is the blockchain fund. You can see last year's return. Again, it scares me. I don't like 90. It did do 90%, but I don't want you to believe it's going to continue doing 90%. It will do a good return. Now, blockchain underpins not only digital currencies such as Bitcoin, Ethereum, and the likes. Blockchain actually helps companies develop applications. So I'll give you a really good example. So the way we built our accounting system in the back end, so this is saying, okay, we have 50,000 users. How does Dove know exactly who owns what? Because we have a ledger. And instead of using traditional ledger systems to do your accounting, when we were doing assessment of how to build this, fraud is a very big part of our business as a fintech, as a bank, as anywhere. Digital fraud is something that happens. And instead, we decided to make sure that we used blockchain as a ledger technology. So we used a company called Zilliqa to actually record everyone's transactions because blockchain is immutable. So that is one example of how an early stage company like us, and multiple other fintechs are using blockchain technology to deliver a service. And it's efficient, it's more cheaper, it's more secure, it's immutable. And I do see other functions such as e-commerce platforms, Coca-Cola, a whole bunch of other big brands moving towards technology to help us streamline and secure processes. So as an investment committee, we sit down and we say, okay, do we believe blockchain is going to be around forever? I don't advocate crypto today because I do feel like crypto has to play out its play. Crypto is quite risky. You'd lose your money if you invested in 2023 when there was that social media craze about crypto. I know all of you lost money. Your portfolio value is down. And my advice is don't sell it. Just leave it if you've got it. Give it another 3-4 years, it'll come back up. But we believe in the technology behind it. And so we see applications of it. We did it ourselves. We've seen other people use it. And essentially, if you look at it, the reason why it's risky as well, and I just want to show you this, is that if you were an investor with us 3 years ago and you put in money, your portfolio is actually down 8%. Actually, my personal portfolio, because I have some holding in here, is actually down 8%. And I'm okay with it because I don't need my money today and I'm not selling. I still believe in the sector, so I've held it. But in the last year, in the next 3 years, it's going to actually be much higher because it performed 90% last year. But over a 5-year period, it's generated an average return of 20%. I'm happy with that. But the idea is this is why we put it as actually moderate risk, because it is a very volatile fund. If you're a long-term investor and you are asking me, will this be a sector that performs well in the long term? The answer is yes. But in the short term, you may see some ups and downs in your portfolio value. So again, it depends how long are you investing for and what your intentions are. So those are all the Q&A questions. And then lastly, let's just, I don't know if there's any in the chat. Yes, Elizabeth's asking, do you have a money market fund? Yes, we do. We've just launched it, the Dover Money Market Fund. We're expecting it to have an annualized return this year of 17%, which we're very proud of. Where are you currently growing your savings? Do savings account outpace inflation? Oh, okay, sorry, that was a question to the wider audience. Sorry, I misread that. Harun, good questions. The question is, do Dover investors earn dividends from investments in funds? Yes. So actually, let me just take a step back onto the platform. So global fractional stocks pay out dividends. So your dividend will fall into your wallet, which is, just give me a minute, it's loading. So this is a dummy account, just so you know. So your dividends, when they're paid out by your fractional shares or your ETFs, will actually come and sit in your wallet, which is your pocket, and reinvest them or withdraw them to your bank account. So to answer your question, yes, we do have dividend paying ETFs as well as bonds, infrastructure bonds. So your interest will now come to the wallet. This is a new feature we added, and also fractional shares. So all your dividends will actually hit your pocket. So the question here is, to start saving, you need 500 shillings amount, maybe. Okay, so to start saving, you need 500 shillings. Now can be topping up with any amount, maybe 200, 1,000, or must it always be 500 shillings? Yes, for the investment fund, for the money market fund, the minimum investment is 500 shillings. So if you come back, so you put 500 shillings today, tomorrow you put in 1,000, but you can never put in less than 200 shillings. And that's the cost of doing business. It doesn't make sense if it's lower than 500 shillings for us. Okay. As a new investor, what are my top 3 investment options you would advise apart from the money market fund? Great question. I mean, I'm surprised. Yeah, I'm glad someone's asked it. This is how I would build my portfolio. If I was a new investor, don't know anything about the markets, I would say I would put in 20% in the money market fund. So let's say I had 100,000 shillings. I'd put 20,000 shillings into the money market fund. I would put in 10,000 shillings into the currency, into the gold fund, into gold fund. So 20,000 in this. So 20% in the Adobe fund, 10% in the gold fund. And I would split the remaining 70 in the techie and the microchip fund. So just do the maths on the 100,000 shillings. I would put in 20,000 here, 10,000 shillings here, and then I would split 35,000 shillings in the techie fund and 35,000 shillings in the microchip fund. And the reason I'm really pro microchip is because the research that I've seen in terms of AI, so microchips go into everything smart. Everything I touch or look at buying is smart nowadays. So this is a raw material that goes into technology. And I think it's a really interesting space to hold. So that's how I would do it. So Francis is asking, what is the average net return? So since people have joined our platform, since we've launched, the average return on our portfolio, on our platform has been anywhere from 15 to 20%. And the reason it changes is because markets go up and down. So that average return changes daily. So it's over the last 3 months, I'm giving you what the return has been, anywhere from 15 to 20%. Deborah's asking, will you plan to launch REITs? I would love to. I just haven't found a REIT in Kenya that makes financial sense. So either the fees of going in are too high, liquidation is an issue. A couple of the REIT funds have actually failed, but we are looking to add global REIT. So it's something that we are looking to add. Okay, yeah, so that's all our questions. Just wanted to say thank you everyone for joining. Really appreciate the time you've spent in answering, time you've spent here. And I do hope to see you on the platform. Please reach out to us should you have any questions. We are available on WhatsApp. We're available on support@dobu.co. Please share with us feedback. We're always looking to improve the product. So send your feedback. We're here to listen, and yeah, happy investing. So thank you, everybody.